This podcast is proudly sponsored by Gyro Drilling. They provide world-class drilling solutions for all types of projects. They specialise in auger, aircore and RC drilling. Head to the team at Gyro Drilling for all your mining needs and see how they can help you with your upcoming project. Hello, I'm Ben Kostrich and this is the Market Bull Podcast. As this podcast grows, every subscriber helps. From those of you who watch this on YouTube or to those that listen on Spotify and Apple, every follower helps. If you do this one favour and hit follow on whatever platform you find us on, I promise I will continue to look and find fascinating people across the world and bring their perspectives to you. Thank you and enjoy this episode. So hello, I'm Ben Kostrich and this is the Market Bull Podcast. Joining me in the studio today is Ron Mitchell, the Managing Director of Global Lithium, which is listed on the ASX under code GL1, listed back in May of 2021. And as the name would suggest, it's in the lithium sector or industry in the mining realm. So welcome to the show, Ron.
Great to be here, Ben.
We'll go through a lot about the company focus, but I always like to pick the brain of who the person is in the room and their history and how they got there. And you've been within the lithium sector for 13 odd years now. I really have a good perspective of what's been unfolding, but more so your history. What is your background in the mining sector?
Yeah, it's a good question. It actually goes back further than 14 years. I've been in the clean tech space for probably close to 25 now. Environmental background, management, commerce, moved overseas into Tokyo back in 2003 to study a master's over there, and then joined one of the big Japanese OEMs and trading houses in Mitsubishi, and worked in a clean tech role selling equipment to global markets out of Tokyo for a number of years, and that really gave me the opportunity to get into the lithium space back in 2011 when I was approached by a headhunter, and I was still residing in Tokyo at the time. About this opportunity to get in the lithium space, and I still recall that first conversation with that headhunter. He told me, I've got a really exciting job back in Perth. It's selling lithium minerals to global markets, and I had to correct him. So, no, tell me about lithium. What is lithium, right? It was a tiny little market back then. In fact, it's really interesting because I've had the opportunity to see the rechargeable battery and the EV thematic grow over the last sort of 14 years. But when I first joined the industry back in 2011, the amount of lithium used in that sector was tiny. It was probably less than 5% of all the demand use. It was predominantly an industrial mineral back in those days, used in glass and ceramics and induced heating cooktops. So we had a big customer base in Europe, North America. And then obviously over time, the Chinese got moving in terms of rechargeable batteries for electric vehicles, and that's where the lion's share of the material was sold by way of spodumene concentrate. So 4.5 years at Talison Lithium, selling concentrates into global markets. It was a great role, great company. At the time, the Greenbushes ore body was supplying more than 50% of the world's lithium from a single asset. It was amazing. Yeah. It was amazing. And obviously it's a globally diversified value chain now, but Greenbushes is still a very important player. And then obviously the company was acquired through a scheme of arrangement between Tianqi Lithium Corporation, which is a listed Chinese entity, and Rockwood Holdings at the time, which is now Albemarle.
Oh, wow. Okay.
A US-listed entity. And we were previously a TSX-listed company, Talison. So couldn't get any investor love here in Australia. We had to run across to Toronto to get any sort of exposure to the investors. But obviously that public vehicle then went private, Talison Lithium Pty Limited. And I joined Tianqi. I knew the chair very well, and I joined them in a commercial role heading up their international sales and marketing business and selling various lithium compounds, again, into global markets, lithium chemicals, lithium metal, and, of course, the spodumene concentrates. I was in that role for about 6 years. It was through that role, actually, I had the opportunity to work with the London Metal Exchange. They were looking to launch a cash-settled futures contract in lithium. I worked with them over a number of years in terms of designing a spec for that product, pulling a committee together, and I was the inaugural chair of that committee. I'm still in that role 4.5 years later. And most recently, I joined Global Lithium back in 2022, in March so coming up on my 2-year anniversary.
Congratulations.
So thank you. Yeah, it's been a fantastic role, and I think the opportunity for me, given my experience, was to be part of that next wave of lithium supply to the market, and importantly, being part of a spodumene hard rock story, because I guess through my experience, I understand that the Chinese and other parts of the market really value the hard rock, the spodumene hard rock. It's the best form of lithium raw material to convert into chemicals for the battery industry. Opportunity to join Global, been in the role now a couple of years as MD, building a team, really enjoy the leadership piece. I've built a really strong team. We've got 2 wonderful projects here in Western Australia, which we're progressing through various stages of exploration and development. And I'll talk about those a little bit later in the podcast, of course. But it's a really interesting time at the moment. Whilst there's some softening in the market in terms of lithium space pricing, there's also some wonderful opportunities, and we're really well positioned to capture the upside when it does re-emerge, hopefully in the not too distant future.
Yeah, when you said there, it just caught my attention. Greenbush is having 50% of the lithium supply, and seeing that initially to where it is now, and I wouldn't claim to know what percent they occupy of the market, but it's definitely not that 50%. You've probably seen a vast array of booms and busts and just price movements and demands within the lithium world. And I saw you speak at RIU, I watched the replay on YouTube, and you were talking about this one having a bit of a particular difference about it. So I want to get your ideas on why you've noticed, or what you've noticed during this 13 plus years within the lithium sector, but more so why this one just feels a little different.
Yeah, good question. And I think the first thing I'll say is that certainly as part of an energy transition, and that's what we're embarking on here by way of electrification, is it takes time. It doesn't happen overnight. So for any investors who think it's a 1 or 2 or 3, 4 year play, it's not. It's going to take decades. It's still early days in terms of the global electrification of the auto industry. I'm not surprised by this cycle.
Yeah.
As I said, I have experienced this a couple of times previously. I was there in 2014. I was there 2018, 19, 20 when we had a bit of a bear market. So I'm familiar with the lithium price cycles, and they typically do happen every 4 or 5 years. If you put this one in context compared to previous cycles, it's different this time around because the buyers are still taking the material. So in previous cycles, whilst there were offtake contracts on the table, binding contracts, there were situations where some of the buyers weren't fulfilling those obligations, so they just weren't taking the product. This time around they are. It's just a question of price. So it is a bit different in that context. Yeah. You're not seeing reneging of contracts, which is good. But secondly, you need to also consider the price run-up we experienced in 2022, all-time lithium price high. And I'll talk about spodumene for the benefit of the audience here. I mean, it reached an all-time high of, I think, more than $8,500 US a tonne.
It was out of kilter with reality.
It was a phenomenal number, and like all cycles, it probably overshot given where the rest of the market was trading in terms of contract volumes. But at $8,500 a tonne, every project makes economic sense. So what you saw as a response to that price on the supply side was just about every man his dog. I heard of farmers out in the back of Western Australia who forget about wheat, let's go look for lithium.
Literally, yeah.
It was the Wild West, and it was the Wild West in Africa and parts of North America. And as a result of that, you had, a very small number of players by way of ASX-listed lithium companies to now we've got, dozens.
Yeah.
But the reality is a lot of those projects were never going to be successful. They were, it was hot money that was coming into the sector. And now we've seen a rebalance, which was always predicted because of all that supply that did come in last year. The price now has corrected. There's still really terrific growth in the rechargeable battery and electric vehicle sector. It's just what we saw was an over exuberation, I think, in the market. That's now rebalancing. Inventories are rebalancing, particularly in China. The purchasing models have changed over there. They've gone from carrying sort of 3-4 months of inventory through the value chain down to effectively hand to mouth because they know they can potentially get the product cheaper next week, so they won't put in a second order. So we'll see a correction there, and I'm very confident. It's just as high prices fix high prices, low prices fix low prices. And I think we're at a point now where we're probably through the floor. We're seeing greater supplier discipline, so the incumbents are announcing pullback. They're taking units out of the market, which is exactly what they need to be doing. And you're going to see a number of juniors pull back and delay their investments as well into the industry. So that only stretches the elastic band when it does rebound. And when it does rebound, companies like ours, I think, will be in a wonderful position because we've done all the heavy spend in terms of exploration, metallurgy, project de-risking, approvals. We'll have a mining lease granted soon, so we'll be able to take advantage of that market when it does come back.
Yeah, well, you just touched on a few points that I think we're now going to progress into, which is about Global Lithium. And when I was looking on the website and doing the research, since you've been there, there's been quite a lot of milestones hit over, we could say, the 2 years that you've been at the helm. So I want you to go through a little bit more in depth, talking about some of those milestones that you've achieved. And you say de-risking. I'm quite curious about, from an investment point of view, what does that mean? Because when you throw it out there, people go, oh, awesome. But I like to break down what that actually means from an investment point of view.
Yeah, okay. So first and foremost, when I joined the company, it had the Marble Bar project, which was a circa 10 million tonne resource at about 1% lithium. We now have two projects in the Eastern Goldfields and Marble Bar. So our Marble Bar lithium project in the Pilbara and our Mana lithium project in the Eastern Goldfields. Both projects we own 100% outright with no royalties. There's no overhang.
Oh, nice.
And importantly, both of those projects are JORC compliant. So Marble Bar is currently grading at 18 million tonne resource at 1%, and Mana is now a 36 million tonne resource at 1.13% lithium oxide. So cumulatively, within the company's portfolio, 54 million tonnes at 1.13% lithium, which is world class. Both projects have more to come in terms of exploration upside. So we expect those resources to continue to grow. But in terms of other milestones, building a team, leading a team has been, probably something I've been most proud of. Building an approvals team, a finance team, a project development team, an exploration team. They're the four key sort of pillars to our business, and they're delivering and driving great value. So milestones. I mean, we are well progressed through a definitive feasibility study at the moment. We'll have a number of really significant announcements in the coming quarters with regards to some outstanding metallurgical test results. So one thing I will say, to de-risk, an example of a de-risking activity is to undertake a really comprehensive metallurgical test program so that you have a really well understood understanding of the ore body and how that ore body differs in different parts of the ore body. And ultimately, are you able to beneficiate it into a saleable product that the market will accept?
Yeah.
So what we've done as a de-risking work stream, by way of example, is undertake a really significant met test program, collected more than 12,000 kilograms of core, and that's expensive. Drilling diamond core is not cheap. So a lot of companies at the moment in the current price are, let's pull back, let's save the dollars, but we've spent it. And then also ensuring that core, that geological core you're using to underpin your metallurgical test program is truly representative of the ore body. Now, to do that, you need to take samples throughout your ore body, and that's what we've done.
Okay.
12 individual diamond holes. So from a de-risking perspective, metallurgy is number one, and that really will determine your flow sheet as well. So that's another key de-risking. What type of flow sheet do you deliver? Our focus, quite simply, and again, based on my experience, is ensuring maximum recovery of the lithium units that are going through the process circuit. So we've chosen a whole of ore flotation circuit. And what you'll find is that to really achieve maximum recoveries, you need a flotation circuit. Because the crystal sizes can vary quite significantly through your ore body. You'll find most of these spodumene dominant ore bodies, which is what we have, you'll have a combination of coarse crystals, fine crystals, but to truly capture as much lithium as possible from your primary jaw crush all the way through to your finished goods stockpile, you can't do that alone without flotation. Okay. So that's what we've selected, key de-risking. And the other de-risking type activities include things like native title negotiations and approvals. There's a lot of effort you've got to put into that relationship. I mean, I personally have spent a lot of time on country with the Gagara Part B, that's the native title claimant group we're dealing with out at our Mana resource. Spending time with them, purely to build the relationship prior to initiating any sort of commercial negotiations. It's been really important, and that takes time.
Yeah.
We put the time and the effort in, and we're continuing to do so. And then on the environmental permitting side, which is the other really critical work stream that you need to progress before you really have a project, we've completed all of our environmental surveys, so both the autumn, spring surveys at Manor. Again, you need to put effort and time and expense into those activities. And we haven't identified any priority 1 species. When you identify a P1 species, for example, an animal or a type of plant, you typically then your project needs to be referred to the EPA, the Environmental Protection Authority, and that can result in typically a 12 to 18 month delay in your approvals. We do not have any P1 species on our project site, which is great.
That
means we
quite
can
helpful.
progress
That
through.
extends the timelines out drastically.
And then lastly, another de-risking is simply your DFS, and you need to spend money on your DFS. I mean, DFSs typically can be anywhere between, including all the ore sorting trials, all those technical trials you need to do to understand how your ore will process and what type of gangue mineralisation it has. We've spent millions in that area over the last couple of years. So this is what's ahead of all the next wave of junior explorers. They need to spend a lot of money, and they need to build a team, and that all costs, and that comes at a cost. So, that's some examples, I think, from a de-risking perspective.
I think that's incredibly insightful because when you see, as you said, the lithium boom, suddenly everyone puts it in their name and there's listing and there's shells and suddenly the market's saturated in it. And it's very hard to distinguish for many, what actually makes a quality project or a company and trying to figure out who's just there because they're trying to capitalise on that cash that's available, or if they've actually got a genuine project and company that's going to progress to those stages, like a Pilbara and some of those others that are really kicking goals. And you mentioned a few other key points that you guys have lodged at both projects, really for this year and hopeful eventual results later this year. So can you talk about some of the expectations of what you're anticipating unfolding in the next 12 months at Global Lithium?
Yeah, there's a lot happening. And whilst I think what I will say in context of the current market, we're taking a disciplined approach to our spend. And that includes, being really mindful of, there's some nice to haves in terms of our exploration programs. We've got some really nice gold targets up on the northern part of our Marble Bar tenement that we'd like to put some holes into.
Yeah.
We think they are incredibly prospective. And there's also a rare earth element discovery on our Manor tenement as well. And obviously we'd love to be able to put some meters into that campaign this year as well. But that'll be deferred given the current market. We are a lithium company. Our focus is lithium. So that's an example of some non-core investments that we'll curtail this year just to protect the balance sheet. And we want to finish the year in a strong financial position. Protecting the balance sheet and having a core team ready to go for when that market responds is our key objective. We are in a strong position, but in terms of milestones ahead over the next 12 months, clearly we've got additional exploration results which will be coming to market. We completed a 60,000 metre drill campaign at our Manor project last year in mid-December, so there's still some outstanding assays which we'll be bringing to market this quarter. We've got a mineral resource estimate update which we'll be announcing Q2. We've got metallurgical test results announcing Q2. Tracking well on the approvals with our NTMA, the Native Title Mining Agreement, hoping to have that executed in the next several months. And that paves the way. Once the NTMA is executed, it paves the way for the grant of the mining lease. So to have a mining lease sort of in possession by June quarter would be a wonderful outcome, and that's what we're pushing towards. And then obviously the DFS is the big one.
Yes.
All of these milestones are building and feeding into the DFS. The DFS, with the pullback in the market, gives us a chance to optimise that a bit further. We've got a real sharp focus on the current expectations around sort of market pricing. So it does really give us a chance to sharpen the pencil, so to speak, in terms of the OPEX and also the CAPEX on the DFS. And then, of course, on the funding side, conversations with the downstream are still progressing. as strongly as ever. There's really strong interest in our project from, a range of jurisdictions, Japan, Korea, of course, China. Recently, Indonesia and India are becoming very active. And then, of course, there's Europe and North America. So really strong interest. We're not going to have a cast of thousands when it comes to customers. But, our lithium, as I've said publicly, is our weapon, and we're not going to give it away. And so, we want the best deal that benefits the company in the long term, but also our shareholders. And what does that look like as a deal? Well, it's our expectation that our customers will help contribute to the capital to the project ultimately in return for the prepay and the offtake.
And from this entire conversation, there's a very diligent and strategic approach, and it probably flows through, as we talked about, the team. And you've also got some key strategic partners. And, I note that the Mineral Resources has 10% on the share register. And we talked before we started about occupying or, bringing them along and building them into it and finding a shareholder group or strategic partners that want to be there for the long haul. So do you mind going through a little bit about some of those partnerships that you're looking at introducing, and then, without putting words out there or names out there, have you got a particular other ones that might be unfolding that, without disclosing too much, that is announced to the market, but where particularly are you looking if it is, like you said, almost global customers that could be, you don't need thousands, you just need a few, but...
Yeah, happy to. I think if you look at the most successful companies in the resources industry, typically early on they do have strategic partners joining the register and assisting in various capacities. So I think obviously with Mineral Resources not only being in our backyard in terms of both of our projects, obviously they run the Wodgina mine up in the Pilbara, which is not too far from Marble Bar, and of course down in the Eastern Goldfields they're running the Mount Marion, and they've now acquired the Bald Hill mine as well, which is 130 odd kilometres from our Mana project. So geographically, obviously some synergies there, but I think we're still going through a DFS, so we're still progressing and optimising and ensuring we produce a project that stacks up on an economical basis. But they've been obviously their experience on the upstream is really invaluable, peerless really in terms of the crushing services type haul contracts that they can offer. They can offer us a lot on the upstream side. And then conversely, on the downstream side as well, our second strategic partner, Canmax, not a household name here in Australia, but certainly in China, they are a heavyweight. They control around 130,000 tonnes of lithium hydroxide conversion capacity, built principally on spodumene concentrate as the raw material. So they're big believers in hard rock, these guys, and I visited their plants in October last year. They are really world-class in terms of the technology they're applying. Great partner, Mr. Pei, who's the chairman of that company, he also has a shareholding in CATL. And your listeners, I'm sure, would be aware that CATL is the largest electric vehicle battery manufacturer on the planet. So, great partners, both on the upstream side, but then on the downstream, working with a company that physically converts our material gives us a great advantage because we understand their requirements from a specification perspective that allows us to optimise. But also they give us a heads up in terms of technology trends as well, which can be really helpful in our own internal strategy. So great partners, and the register, the balance there's some high net worth individuals, a few retail, institutional, and of course board and management makes up the balance of the register.
Well, that's a good point to segue into again is the team. You've alluded to it throughout the conversation. You've been quite proud of bringing people into this company and building a very succinct team that's fully, on the direction of achieving the goal of getting to that next stage. So can you talk to a little bit about potentially the board that's around you and more so some of the team members that you've brought in to really excel at Global Lithium?
Yeah, probably aside from, having a couple of great JORC compliant resources that are still early stage, there's more work to do on those resources clearly. Probably my proudest achievement is building the team, the management team. But firstly on the board, the board is a heavyweight one. We've got, I think, cumulatively close to 180 years of experience in the resources sector. They're all local directors based here in Perth, which makes it great. We can pick up the phone and catch up for a coffee and talk strategy, quite quickly, which is important in a market that's volatile, such as now. So just on the board, then Jeff Jones is our chair. and Jeff joined in April last year. Jeff obviously has a lot of experience in the resources sector. He's non-exec chair on a couple of other boards, and Jeff also spent 10 plus years at GR Engineering Services as their managing director, another ASX listed company, and GRES, or as they're known, the acronym. Those guys are definitely one of the players that is in the mix to potentially build our project. They've got some great experience here in Western Australia, building from an EPC perspective. So, not only Jeff's experience, but obviously his connections and contacts are really important. Dr. Dian Min Chen is a mining engineer by background. He's also the founder of the company, and again, great connections. His mine engineering expertise is really helpful for us as we work through our mine schedules internally and the design and balancing the strip ratio versus optimising an open pit versus an underground component. So, and Dian Min is a very passionate supporter of the company, and he's introduced a number of new shareholders to the company as well over the course. Greg Lillyman. Greg was 2IC to Andrew Forrest at FMG for a number of years and spent 20 plus years also at Rio. So heavyweight in particularly iron ore, but again operating in the Pilbara. His production experience, but also knowledge and contacts, understanding of native title has been really valuable to me and been a great sounding board. And then rounding out the board, we've got Hayley Lawrence. Hayley is a commercial lawyer by trade. She's also the chair of our sustainability committee, and I work very closely with Hayley on corporate governance and sustainability in particular. But Hayley, a very curious board member, and adds some tremendous value from a legal perspective, and really trying to take an opposing view on certain decisions we're making, and really keeps the management team accountable in terms of her legal background. So Hayley's adding great value. And Kevin Hart is our co-sec, not a director, but obviously sitting there as co-sec. And Kev's got more than 30 years experience as CFO and co-sec for ASX public listed companies. So great board. We work really collaboratively. We challenge each other, but always sort of acting in the best interest in our fiduciary duty, making best decisions on behalf of the company and our shareholders. The management team, just won't go into each individual within the business, but at the exec level, Matty Allen, our CFO. Matt's come across from Hastings, and he spent more than 10 years in the oil and gas industry. He's lived in Africa, US. Great experience in bringing companies from conception through exploration, development, and ultimately into production. So Matt's leading our commercial, and he's a real strategic thinker as well. So Matt and I have some really good discussions and in terms of growth-focused opportunities for the business. Logan Barber is our GM for geology, so he leads our exploration activities. And Logan's touched, I think, just about every piece of lithium in Western Australia as it relates to spodumene. And he helped make a number of discoveries, including our Marble Bar project, and of course, he also worked at Wodgina as well with mineral resources. And then Dr. Tony Chamberlain heads up our project development team, so that's really all the DFS-related work, the metallurgical work. Tony's has a PhD in metallurgy, so that
Helpful.
is a big advantage,
Yes,
absolutely.
Yeah.
So, and there's quite a large number of people working within Tony's team as part of the DFS, and Tony's got an enormous amount of experience working not only at the executive level, board level, for ASX listed companies as well.
It's a fair amount of people,
So,
and a bit of experience, of course, as well to go along with it. Yeah. And I want to go back maybe to the outset of lithium again, because, there's no shortage of, I guess, the pros and the cons and almost the bears and the bulls. There's always that in every market. And you talked about, this potentially being the floor of the lithium price. And it's hard to really speculate, where it goes. And, the price for high price is high price and inverse. There's anyone's guess to know what's going to happen. But I mean, what can you really see unfolding over the next period of time within that lithium space, given that, you're in the thick of it and you're seeing what the buyers are wanting and arguably what the other companies in the industry are doing. And it sounds like this is standing apart from some of those others that have just got lithium in the name. Where do you really see lithium going in the next handful of years? And, maybe it isn't just a handful, it's, as you alluded to, decades.
That is a great question. Now, if I had a categoric answer to that, I probably wouldn't be doing my day job. I'd be doing something else. But Let me have a crack at answering that. Look, I think first and foremost there's going to be industry consolidation. You're going to see that absolutely in this climate. There's a lot of companies, we're very well capitalised. We've got 36 million in the bank as of 31 December, and our burn rate is coming right off coming into this year. So we quite fortunate we timed that perfectly. There'll be a lot of companies pulling back, preserving cash. It's a hard market to raise money in at the moment. The equity market's, pretty much closed at the moment. I think there's a lot of money parked up on the sidelines waiting to be redeployed. But most of those institutional investors are waiting for some green shoots in the lithium sector, and movement in the commodity price will help. But if the market does sort of traject sort of sideways for the next several months, I think there'll be a few of these less capitalised juniors, ASX juniors, that can't go to the equity markets. It's going to be hard to get funding, so they're going to have to look at consolidation as their way out effectively. So there's going to be some good opportunities for us, to be honest.
Yeah.
So consolidation is absolutely one thematic I think your listeners should be keeping an eye out for.
We've almost seen a little bit of that last year with all the billionaires sort of occupying, getting stakes as well. Not trying to miss out. So
definitely the land banking went on, but then the second piece is more around the downstream. What's the downstream thinking? If anything, they're a bit nervous at the moment because they are taking views 5, 10, 15 years out from now. They're not just looking at the lithium price here and now to form a view. So they are seeing pullback in the market by the incumbents. They're seeing reduced spend in terms of technical de-risking work streams by the juniors and exploration spend by the juniors. So that next wave of discoveries is less likely to happen this year. So they're worried that actually people are slowing down their development, but they still need the lithium. So it's a bit of a conundrum. So what you may see from some of those groups is greater participation in projects to help get them funded. So that's probably another thematic I'd keep an eye out for throughout the course of this year.
Yeah, there's this almost disconnect about, I found lithium and then boom, it can go into some form of car. And I've heard it repeatedly that these projects and getting lithium to the concentrate is not you coined it an overnight story. This can take years. And we're in this real economy, in this market where people just see it and they're like, it happens the next day. And people don't quite understand all the steps that go into getting a project to that downstream capabilities or finding those. And lithium with the uptake, it's no exception, arguably probably more difficult seeing some of the players in the industry is really struggling. And, we haven't talked on brine or hard rock versus direct lithium extraction and all those that are unfolding all at the same time. But, I mean, in closing, all the points you've talked about today, I like to make it pretty clear and concise for listeners to go, all right, these are the 3 key takeaways that I should remember. I know everyone likes things in threes. So if there's those points, 3 key points that listeners and viewers should take away from the discussion today, what would you say they should be?
Good one. I'll probably, before I finish off, I'm going to just share a couple of statistics with you. I think these are really interesting stats. Okay. So of all the ASX listed companies, only about 5% of all the ASX listed exploration companies actually make a discovery. Okay, and this is across all resources. I'm not just talking lithium specific here. And of those 5% that do make a discovery, only about another 5 to 7% of those actually make a discovery that's of economic value, that you can take through a JORC compliant process, deliver a DFS that suggests to the market you can have a positive NPV on your project. So exploration is high risk. It's not easy to get to JORC compliance. We have a JORC compliant resource, 2 resources. I think in this market, being well funded is really important. You need to protect your balance sheet, have some discipline. And what makes projects successful, in my view, probably 3 things. Obviously, starting with a great resource, which we have. Having a good team, a strong team, experienced team that knows how to execute, which we get a tick there. And then lastly, having your projects located nearby infrastructure. Because what I can say, I've been in the industry a long time, I've heard of a lot of discoveries, but the reality is getting those minerals to market is going to be a massive challenge. And it's going to likely result in delay because of the approvals challenges, not just for the processing plant, but also for the infrastructure. So location's everything. Experience matters, and having a project in a great jurisdiction is absolutely fundamental.
I appreciate them. I think that nails it. We hear the all the main spots have been taken, but yeah, having good infrastructure is almost a paramount important. You can't just go into the middle of nowhere, and we see how vast Australia is, even WA. You put that on a map, we sort of get stuck in the bubble being like, oh, it's a normal sized state. Whereas you compare that to somewhere in Europe, WA occupies, I don't know how many. It's a massive, and there's so much stuff, and there's not many people in between all that midland Australia. But yeah, were there any other, I guess, final closing points you wanted to get to listeners, and maybe more so, how can listeners stay involved or follow Global Lithium to keep an eye on all this really quite exciting news that's coming over 12 months?
Yeah, look, I think listeners, again, I'm reasonably bullish on the market. I think the market is going to come back, and it's going to come back in a big way. You only have to look at the products that are on offer, electric vehicles. We're not going back to the old horse and cart model that I refer to, the ICEs. And also the next wave of consumers are really focused on technology-based products, which electric vehicles are. They're not just a product to get you from A to B. They're a piece of tech. Yeah. So don't underestimate technology. It's something that I've coined over many years. Technology has the ability to penetrate and influence consumers in a phenomenal way. So, yeah, I'm very bullish on the product, the market. Clearly, this pullback is going to result in the elastic band getting stretched even further, in my view. And lastly, to follow the company, quite simply, we've got a great website. Jump online, globallithium.com.au. You can follow us on the socials. We're pretty active. We've got a Twitter account, LinkedIn account. Lots of good content on there. And, of course, we have a number of webinars and throughout the course of this year, so there'll be lots of good updates by way of video and other content to share. And, of course, if ever you want to have a conversation with me, I've got a doors open policy. So.
Oh, awesome. I like that. I've seen that in a movie, actually, the door open. Do you actually have physically taken the door off the hinge as well?
And there is a hinge on it, okay. But it spends more time open than it does closed.
Good. No, I appreciate it. We've covered a lot, and I know from the sounds of it, there is going to be a lot of activity happening, and it's going to be an exciting year. And I know there is still such a thirst for lithium and good quality companies. And I think this is probably one that, if you haven't seen it in the watch list, I'm sure others are now adding it in there to keep an eye on it, because there's so many people that are probably in the exact same position as institutional, waiting for that candlestick, and then everyone just floods in at the same time. But I appreciate you taking the time to speak on the show today, Ron.
Great to be here, Ben. Thank you.
Thanks for listening to the Market Bull podcast. Please remember that the topics and stocks discussed in this podcast are not financial advice. If you enjoyed this episode, please make sure to like, share, and follow. You can follow the Market Bull on all our socials and keep up to date with global market insights.